Hello and welcome to stocks.communitylearn.in. There's a website through which we emanate and pass on the stock selection knowledge and how do we make money from the stock market. So today's topic is to discuss if the growing market is that take an example of growing indices. I'll take NSE as an example. So if you're seeing that market is bouncing back and it's growing, then growing means indices level. So if it was the earlier levels was around, let's say, 5,800 for Nifty, and it's gone from 507 to 58. So it's a growing market. So in this kind of flow, how do you select the stocks? In the previous sessions we talked about there are various ways you apply 8 different criteria to select your stocks. Let's say those criteria, I mean one of the criteria was there should be a daily decline. Basically, out of those Nifty 50, uh, these are our scope. We only buy, we recommend to do trading on these stocks which are 50 in number that we call a Nifty 50. Those are the large cap index stocks. So if the market is growing, then probably the previous session we talked about the selection criteria, which was like your buy is equal to last traded price minus the variability of the stock. So for example, ACC was 1,000. An example, and variability is 2%. So that means it's like 20. So 2% of 1,000. I'll just put say 2%. So that will translate to is 20. So 980 is what would be the buy price. Now, you may not get any stock or at this rate because the market is growing. So what will happen is eventually your list of stocks that would be suggested by the tool that we talked about, that's Find My Stocks tool, would be very, very limited. So we also want to have the money rotated. So that means if you're sitting on a cash, then you should just keep buying even though in the growing market. So we want to change the formula a little bit. So what we recommend is when you decide the buy price, so take the yesterday picture. Yesterday the ACC cement has lower limit, upper limit. It's this like max. Sorry, max could be let's say 1,080. Minimum could be 970, and then some closing might have happened. So in between the stocks might have touched here top. It's come down. It's closed here, which is 1,000 level. So what we recommend is look for the last minimum price LMP, which is 970 in this case, and then you do the subtraction of variability. So last minimum was 970, and then you apply this 2% on 970. So that means like 18 rupees. So this would be 970 minus the roughly 18. So 20 rupees less, which is like 952. So the buying price for ACC cement would be you try to get this product at 952. Now the question is, if you're not getting the product at 980, how would you ensure that you will get a even lower price tomorrow when you look for trade? So the idea is when you look for this kind of product, there's not just one ACC cement you're buying. In this version, you have a very limited stock. So let's say stock selection criteria, stock selection criteria, whatever was your criteria that's giving, let's say 2 to 3 stocks, right? So we want to define our stock selection criteria also, and we have the next session we'll talk about it. So the new stock selection criteria in the growing market will give you like 18 to 22 different stocks. Now, since the number of stocks are more in the recommendation, then you apply this LMP minus variability. So you get there's a a good number of the stocks to pick, and all these stock will be bought at these formula. So this will help you to broaden the selection criteria, and then at the same time you're a little more stringent when it comes to the buying. So there essentially two things are happening here. So you're broadening the buy scope. So earlier you're only buying 2 3 stocks, now you're buying 18 and 22 stocks, so they are broadening it. And second is you're de-risking yourself by putting more pessimism pessimistic more pessimistic buy price, I would say. So buy price is a little more pessimistic because 952 is the new price. This is what you would buy. Earlier, previously we talked about buying at 980, but now you're buying at 950 to 52, which is more pessimistic. So these are the two changes that we are recommending. These changes are applicable when the market is growing. So the assumption is that market is bouncing back, and you see good news coming in. Therefore, you need to, the previous stock selection criteria that we had has to be modified. So in the next session, we'll talk about in Excel, we'll talk about what changes we did in our stock selection criteria. And also one change here, that how do you derive the buy price. So thanks for watching. And yeah, you drop me an email or just subscribe us so that I can send you the Excel spreadsheet which does all of these automatically for you. Thank you very much.